Hello, Michael Bull here with America's Commercial Real Estate Show. We're in Nashville at the RLI 2018 event in Nashville. And I tell you, it's been a great event. And Dr. Mark Dotzour, he has been an economist, and he spoke to the group, and the group was really wowed. He's a real estate economist with the Real Estate Research Center at Texas A&M University. And I tell you, it seems like what's on the mind of everyone is how long are these good times going to last? And this cycle's seems like a little long in the tooth. What do you expect moving forward for the economy in real estate?
Well, the theme of my presentation today was clear sailing ahead. The economy looks really strong. As an economist, I'm also always hesitant to get too optimistic. But all the data appears to show that 2018 and into 2019 looks really good. All the data seems to confirm that we're in a good situation right now. Creating jobs every month, somewhere between 80 to 300,000 Americans are getting a job. And when Americans get a job, they're also getting pay raises, they're getting bonuses, so they're able to spend money, and that's what our American economy does, is when we spend money, we grow.
Yeah, that's right. Consumers have proven they'll spend money if they get it, right?
Absolutely.
Now, what about some of the tax acts, some of the deregulations, a lot of things that have kind of gone on since November? Has that kind of adjusted the economy and kind of your forecast?
Absolutely. The Tax Reform Act changed all the rules. Actually, the election changed all the rules because business enthusiasm just skyrocketed after the election. Whether you're in a blue state or a red state, the business community was on fire with enthusiasm over the election results. Tax reform is just icing on the cake. The question is whether or not we really needed tax reform, tax cuts, when you're already at the top of an economic cycle. Traditionally, what happens is you have a tax cut at the bottom of a cycle when everybody's out of work. You never have a tax cut at the top of a cycle when unemployment is at record low levels. And so that's what creates the possibility of a threat to my clear sailing hypothesis, and that is that interest rates could go up faster than we would like because inflation could pick up.
Yeah, and as part of inflation, potentially from income increases, I mean, if there's a lot more jobs created by all this enthusiasm, and we already have a great job market, may we see wages finally go up?
Wages are going up, and they're going to go up further. There's 6 million jobs open in the U.S. right now, and it seems like every day some big company's announcing they're going to hire another 2,000 people. So the question becomes, who's going to do all this work? And if we pass an infrastructure bill for roads and bridges, again, the question arises, who will build these bridges and roads? We need a lot of immigration in this country to do those jobs, and it doesn't seem like that's going to happen. So we've got a shortage of truck drivers, we've got a shortage of trucks, we've got a shortage of skilled labor in a lot of areas. So when that happens, wages tend to go up faster than normal.
Yeah, it should be interesting to see what happens moving forward. And then we recently have the tariffs, right, on steel and aluminum. Is that good for the U.S. economy long term, or what do you think there?
It depends on if you like having jobs in America or not. If you really like cheap TVs, you hate jobs coming back to America.
Okay.
Your TV's going to be a lot cheaper if it's made in China or Japan or somewhere
And TVs
else.
have gotten cheap.
TVs are pretty cheap, absolutely. Yeah. So when you start making washing machines in America, they might cost another $75 or so. And that's the decision we're going to have to make. Do we mind paying $75 more for a washing machine that's made in Milwaukee, or do we want to get that $75 cheaper one made in China or Singapore or somewhere?
Well, we want both, of course,
Right, and my fear is that for the last 35 years, the American people have voted with their pocketbook and their votes to say, we could care less about jobs in America. We want that cheap car and that cheap TV.
Yeah, so does that mean that some of these companies, the repatriation, this build it in America, is it really going to happen if we still want to buy our stuff really cheap?
It feels like it is happening. It's kind of interesting. China has announced they're going to start manufacturing stuff in America. This is what happens when you try to get fair trade going on. Nobody wants a trade war, But it would be really nice if we had some kind of fairness issue where we get some jobs and wealth instead of China getting all the jobs and wealth. That just seems like a good deal to me.
Yeah, I like the idea of that. And what about interest rates? You mentioned the challenge could be inflation, and it could be that interest rates rise further. Maybe the Fed says, hey, we've got to rise rates, market's good, and I guess that's a good signal. Where is the increase? Where do you expect them to be, and where is there potentially a problem?
The real problem is not how much the Fed raises interest rates. The real problem in the interest rate environment is not the Fed. It has to do with whether our Congress suddenly decides that they don't mind spending trillions of dollars that they don't have. Our federal debt is already over 20 trillion. It's probably around 22 now. The tax bill they just passed added another $1.5 trillion. Whatever mischief they did a few weeks ago to keep the government open for a month or two cost another $300 billion. If they get in the habit of every time they open their mouths, the federal debt goes up by $500 billion, then interest rates on mortgages and stuff will go up without any control by the Federal Reserve whatsoever.
And is that really the biggest threat to the U.S. economy overall, long term, is just that mounting debt?
The debt is not that big a deal to me yet. I know a lot of people in America are very concerned about 20 trillion, but long story, but I'm not. We can easily handle 20 trillion. If it gets up to 40 trillion, I might get worried about it from the standpoint that our dollar is going to be worth nothing and all of that sort of thinking. But right now, that's not that big of a deal. But what will happen is if the world investment community loses confidence in Congress and the president, then our interest rates will go up. And when they do go up, they can go up kind of faster than you might think. And that would impact mortgage rates and interest rates on borrowing for all kinds of stuff.
And if you looked in your crystal ball and you looked at a year from now, here we're late in the first quarter, what would you guess for rates a year from now?
Well, mortgage rates might go up a little bit. I think mortgage rates could go up another 0.5% maybe. Unless the infrastructure bill is passed and it adds another $1.5 trillion or $2 trillion to debt, then all bets are off at that point. Because if Congress decides to do bridges and stuff and not pay for it with user fees or taxes of some kind, the bond community could lose interest in American treasuries, and that's when rates start going up.
Yes, but what you started, the theme of your presentation was things look good, right?
Absolutely. I think unless Congress makes a big mistake, everything looks good. The problem is that Congress seems to do nothing but make big mistakes.
Yeah, that's true. Well, Mark, thanks for joining us today.
I enjoyed it. Thank you.